Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame bearish scenario where we're looking for a move towards the downside, and this scenario is by far most interesting from a trading psychology point of view, and more about that in a second. So the most common target area for wave Y is between the 1 and the 1.236, taken from the high to the low of W to the high of wave X, sitting between 26.1k and 25k, and the most common target area for a wave C pulled in the same way over here is between 23.3k and 22.3k. And what's interesting about C is that it also has confluence with a very important target box that I have there between 22.6k and 21.8k. Now, from a trading psychology point of view, this is by far the most interesting scenario, because what happens up here? Well, first of all, you have the people that went short over here in this range and potentially put their stop loss above 31k. Now these are now wicked, liquidity is taken, the stops are triggered, so they are out of position. But what also happens is that you have the breakout longers, right? People that go long the moment they see the candle move above a 31k. So those are the people that enter a position like this, put their stop loss either below this low over here, then they already got wicked, or they put their stop loss somewhere lower, right? We don't know, and they expect continuation to the upside. So going down once more to also take all the stops of the breakout longs, make them scared, move to the downside, can be very, very interesting. Now, is this now out of nowhere the preferred scenario? Well, I like a little bit more information after this bounce, first of all, to give more probabilities to this setup. But of course, I give many updates a day, so we will get there, right? We'll wait and see and then make sure that the probabilities are according to the different plans. If you then look at the bullish scenario, then the low of Y is in, and we'd be looking for continuation to the upside in a wave 3, after then a wave 2 is going to be made. In this particular scenario, wave 1 is in. Most common targets of wave 2 is between the 0.5 and the 0.786, which is between 27.9k and 26k. Rare target being the 382 at 28.7k. A very rare target, which is not something I actually like to see, is the 236 at 29.6k, and another rare target is the 886 for a wave 2 at 25.4k. Now, currently price bounced on the 236, which again is a very rare target for a wave 2. So in both scenarios on the medium time frame, it would be good to see a little bit more downside. And then the way it comes to the downside is how we can decide if it's going to be a wave 2 or a wave C or potentially a wave Y. Because in a wave 2, what you want to see is a 3-wave structure to the downside. By far the most common targets out of the common targets for a wave 2 is the golden pocket over here, sitting around 27k, so that's an interesting level. But if we then look at the target areas to the downside, then the first area, if price would move to the downside once more, is going to be between 29k and 28.8k for a bit of support. And then we have a deep dive to the downside where this target box, or these two over here, are actually below the golden pocket. First one sitting between 26.5k and 26.2k, and the second one very thin over here between 25.9k and 26k. So in both of these scenarios, a little bit more downside would be nice. However, then again, the 0.236, yeah, it can happen, a wave 2 hits it, but it's so rare, you know, so let's wait and see what happens more locally. And what I also want to show you is something that a friend showed me by email. So this is very, very interesting because price is now knocking on the door of 31k, knocking on the door to continue towards the upside. What are the probabilities? Well, let's do a little bit of a history lesson here, right? So what he showed me is a screenshot of 2019. We had resistance, or support over here. In 2018, price moved to the downside at the end of 2018, then moved up in 2019. And then we got into this situation over here, where you could count a 5-wave move to the upside, and maybe people were waiting for another move to the downside in a wave C or a wave Y, right? Maybe a corrective structure. Instead, over here, price pumped towards the upside. So now the question is, déjà vu. Support turning into resistance. Maybe people waiting for another move to the downside, but it may be a bull market. We never get that move to the downside. We never get another buy opportunity. Instead, it continues pushing towards the upside. I thought this was actually very, very interesting. It was a good find. Now, of course, the market is different. Markets don't like copy exactly, you know, but they rhyme, market rhymes. So let's wait what's going to happen on the lower time frames in the upcoming days and give proper probabilities to these two scenarios. But in both of the scenarios, a little bit more downside would be nice. But then again, the 236, it is a target, but preferably you like to see lower in a wave 2. Then finally, we're going to talk about this scenario again. Not finally, I still have more scenarios, but we've been talking about this scenario so often now, right? A 1, 2, 3, 4, and then a wave 5 to the upside. And I currently labeled it as an alternative scenario mainly because this structure is so long in time. It's a very, very long structure. It took a long time to form, especially in comparison to this wave 2 over here, where the low of this wave 4 is made after the 4th time, basically meaning that this wave 4 over here is 4 times longer in time than this wave 2, which is usually not something I really enjoy to see. So that's why this for me at the moment is an alternative scenario where you'd be looking for more upside in a wave 5, where the most common target for wave 5 is pulled from the high of 3 to the new low of wave 4 over here, which is sitting between 31.9k and 32.8k, which is a nice confluence with the 2022 range highs as well at 32.5k for then maybe a liquidity grab and a move towards the downside. Now the liquidity grab is interesting in multiple scenarios, because also in a scenario I'm going to show you in a second, it can still be a 3-wave structure like this, where this is an A, we get a B, and then a C to the downside, but then this is a wave B and not a wave 5. So that is very, very interesting, right? So we have to wait and see how that pans out, but the potential trading setup over here is moving to the upside, taking the wick over here, taking the highs, right? Taking the highs of those wicks, then moving above, but closing the candles below, and then moving to the downside. And the close is then an entry, stop loss above the wick, looking for downside. That is a swing failure pattern trade. Of course, you have your own plan, right? You're your own trader, your own plan, own strategy. This is YouTube, no financial advice. You know how all that stuff goes. Now, in this particular scenario, if we would be looking for a wave 2 or potentially a wave Y, because I actually need to ride a wave Y here as well to the downside. In a wave 2 or a wave Y, we're looking for 3-wave structures. And these can begin with expanding flats, meaning that this is now a finished impulsive structure to the upside. So either C is in, or then a wave 1 is in the bullish scenario. And this is a corrective structure where, yes, we bounced on the 236, but preferably we like a little bit lower, right? So in a wave 2 or wave Y, you can still have an expanding flat, which is an A, B, C. And if we take a fib from the high of 5 to the low of then wave A, right, potentially, and we put it on the wave B expanding flat targets, then you will see that also the expanding flat targets for wave B are around that 32.23k area, which is also interesting with the highs because they're slightly above. So you can also wick above, close inside this area, move to the downside, and in a wave C or potentially a wave Y, it's going to be a WX and then eventually a Y to the downside. So very, very, very interesting indeed. But an ABC is definitely on the cards after this low is in, which would then mean this is either a wave 2 or a wave Y, so we can already give probabilities. If price moves to the downside impulsively, then it's more likely we might get a wave C, but I don't like this as a wave 1, because then we're looking at a wave 1, 2, and then we expect a bigger 3 to the downside. But this being a wave 1 over here, I really struggle to see that, as I mentioned in my previous video. Then we go to the micro scenarios over here, and we zoom into the 30-minute, where this was the plan that we had, price moving to the downside inside the target area with also that key level we've been looking for a while at 29.5k. Very, very nice bounce indeed for then a move towards the upside. Now, from experience, I guess, like, yes, this is a very nice bounce. It's quite impressive, but we also have a very big wick. So the question is, are we going to fill that wick, right? Because if we look at this move to the downside, then what we were looking for in the final yellow wave Y is a flat and then an A, B, C. But a wave C is a 5-wave structure, and what we got is a 3-wave structure. And that is important to notice, because this does not look like a 5-wave move to the downside, and this cannot be part of a wave 4 anymore, because it retraced to the price action of a wave 1, which invalidates a wave 4, and also it retraced too high above the 0.5. So this being a 1, 2, 3, then a 4 expecting 5, it's not something I like to see. However, we still have a scenario for potentially downside where this is then a WX and either wave Y is in. So this was a 3-wave structure, right? So we removed the ABC and we put on a wave Y, or this is an unfinished wave Y in a 3-3-3. The thing here is that because this structure already hit the most common target area for a wave Y, which is the yellow area over here, the 1 to the 1.236 taken from the high to the low of W to the high of X, I don't like it to see price come down like again in like a three-wave structure. Because if we are looking for a WXY or an ABC something in a wave Y, like a three-wave structure in a wave Y, I like the first structure not to hit the common target area for wave Y. Only the last structure in a three-wave, I prefer to see it hit the common target, the target box basically, for wave Y. But now this first move to the downside already hit the common target area. So moving down once again is not really something I like to see, and therefore the probabilities might be more towards the upside, also with a potential ABC expanding flat. But we have to wait and see what price, always after big moves like these and when bigger target areas are hit, you need to give price a little bit of time to show its next step, right? To show its hand for whatever it wants to do next. Now, right above price at the moment, we have a bit of resistance at 30.6k, 30.7k, so that can be quite interesting. And if price moves that high, let's wait and see how it is going to react over there. Now, if we then zoom out once again and go towards the more bearish scenario, then we are looking for a 5-wave move to the downside and then a wave 1, 2, and this being part of a bigger 3. Now, this is an alternative for me. The more bullish scenario, I suppose, where we expect more upside to come, is my preferred scenario at the moment, especially seeing how these waves are forming. And if we look at the bearish scenario, well, first of all, in a wave 3, you want to see an impulsive structure, and then inside a wave 3, another 1, 2, 3, 4, 5. Now, this doesn't really look like a wave 1 because we can't count a 5-wave structure. It looks more like a 3-wave structure. Then this move to the upside has to be a wave 2. So you need a 1, 2, for example, for then a bigger 3. But that's not nice. As mentioned, there's no wave 4. And if this is a 1, 2, 1, 2, then we're talking about an expanding diagonal. 1, 2, 1, 2, which is not something I like to see. I like to see contracting 1, 2s, like nested 1, 2s, 1, 2, and then a 1, 2, and then potentially another 1, 2, like creating a contracting diagonal for then a push towards the downside. That is by far most common. So finding bearish scenarios over here is actually quite difficult. Of course, price can retrace, right? But taking the wick at the moment is not that likely. Also, this diagonal, in the previous video, I already went over why this is so unlikely, so please check that one out. But this is not a nice diagonal at all, doesn't respect many of the rules of a diagonal. So this is definitely an alternative scenario. If we look at the CVD on the lower time frames, then we could be looking for some bullish CVD divergences. As you can see, higher low on price, lower low on the CVD. But I don't really like the 15-minute CVD because we have this big wick. And I don't like to use CVDs with such a big wick as well. So I prefer to use it now on the 5-minute and then wait and see what's happening over here on the 5-minute time frame. And on the 5-minute, we don't yet have bullish divergences between this low over here and the higher lows on price. So of course, again, we need to give price a little bit of time to show us the next step. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, which is the CVD. And for now, thanks for watching and subscribing, and I'll see you at the next one. Bye bye.